Hello, this is Rich Canlione coming to you from the CME Group trading floor on trade rundown and review. Obviously, we've seen today's action with respect to the economic data stands out as incredibly good versus survey. We saw the housing starts. So in totality, the economic numbers that we've seen, all the stuff fundamentally still points to a higher extension of the buy-side trade. It doesn't make sense at this point to go ahead and try to sell this market. There are no retracements that this market on these rallies doesn't resubstantiate, and eventually that resistance becomes support. In fact, if you take a look at it, we're almost at 32-month highs. 32-month highs actually in the S&P futures would come in just inside of the 35 handle. So 1335 is probably the only area where this market might see a little bit of cause for pause. What the market is looking at today that might give it a more definitive leg up is guidance from the FOMC. The FOMC minutes might very well suggest that we're still seeing expanding growth, but there might be some risk to that growth. If in fact the FOMC removes that language, we could see another extension higher in the S&Ps. Some retracements in the market, just to give you some support. 8-day moving average, which this market seems to really hold on to, comes in at 1323, even to 1323.5. If you have an opportunity to see those levels again, obviously those are areas that you want to go ahead and put some buy trades on and obviously manage that risk. Under that, on a bigger trade, you're probably looking at the 1275 level, 1280 area, which is the 50-day moving average. Personally, I don't think we're going to see that for a while yet. In fact, if you take a look at it, we actually have a double bottom going back to February 10th and the 11th, 1308.5, 1310. That is probably your best near-term support. I would look to buy those levels. Rich Canlione from CME Trading Group, Trading Floor, signing out. Thank you.